Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide online valuation services for mediation and litigation based in St. Louis, Missouri. Today, we'll be discussing business valuations when the future is unknown and the past is not reliable with my special guests, Josh Shilts and Stephanie Swetland. Josh's practice focuses on complex financial matters and disputes. He frequently lectures on forensic accounting matters and has been involved in hundreds of investigations involving personal and business disputes. He also has provided expert testimony in commercial and family matters around valuation, economic damages, and fraud. He's been qualified as an expert and testified in state and federal courts. Stephanie Swetland is also a licensed enrolled agent and is a QuickBooks Pro advisor for both online and desktop. She is continuing her education in accounting and plans to obtain her CPA license within the next couple years. They are both forensic valuation experts and offer tax advice in the state of Florida. I mean, I think if there's ever a time for business owners to kind of start to engage with a CPA or a bookkeeper, it's now, because things are so confusing and they're presenting documents, especially in a divorce. I mean, I had a recent one lately, and I was like, I can tell that your books don't really tie to your tax returns, which usually I'll just see like you didn't pay for the accountant to go into your, QuickBooks and make those changes to tie to your tax return. But I'm just going to tell you that's probably a good idea to do right now, because if somebody else starts to see it, because we've seen it during the pandemic, we've seen a lot of buyers come to companies and say, hey, you've weathered the storm, you're profitable. Are you profitable? We assume you're profitable, and we want to buy your company. Yep. And they come to us and they're like, okay, but what is it worth? And then we start looking at their financials and I'm just like, what happened, man? Like, how is this such? But they just don't know how to handle some of the stimulus, and their books are kind of a mess. The other thing is, a lot of times they need to get forgiveness of the PPP before the transaction. So there's right now, operating as a business is really, it's almost imperative to get other advisors involved, because there's a lot more now that you can do wrong, than in the past, I think.
Agreed. I think there was a recent survey about the hardest tax seasons in the last 50 years. And number one was this tax season. Right. Number two was last tax season. And then number three was like 1986 or something. So I know we all laugh about it, but
but it's very real. And we're still, the changes are happening all the time.
Yeah, the American Rescue Plan came out, and now the unemployment, which was taxable, is not taxable. So,
you think about, to that point specifically, you think about all of the people that started filing and just having them in queue with the IRS in January that have filed. And so now all of those returns, and the IRS is not accepting superseded returns right now, which are amendments that are filed before the actual deadline of the return. So you can't even amend those until after April 15th. So it's going to be a continuation. And I think here in Florida, we've seen one in 04, 05 with the hurricanes were really bad. We went through like tax season for 2.5 years. And I feel like it's the same thing now because it's not going to end. I think another important piece of legislation that came out of the pandemic and that really does affect small businesses that a lot of small business owners do not think about is the Secure Act. So most of the time they can't put a plan in place, right, a retirement plan in place after October 15th of that current year. Now, because of the Secure Act, they were allowed to do that up until the due date of the return, and still not to be funded until September 15th. So I think that that's also an important consideration, both for tax and valuation purposes, because at the date of valuation, they may not have known that they were going to make this contribution. However, that's a big piece that does affect the future value, right? So even if it's included in a footnote, it's just a considerable item. I think that it's important that, valuators and tax analysts are aware of that and are looking for that, and when we're working with our clients, I think it's important to educate your clients. We have some clients that make a lot of money and they don't necessarily spend a lot of money. Well, you can save tax dollars and instead put them up for yourself. And I think that that's another thing to be considered.